Hi, Jim Cramer here with our energy expert, Dan Dicker. We're talking about a real complex topic, but it could be one where a lot of money can be made. We're talking about the actual credit market, the high yield market, which I know a lot of you are interested in for the oil companies. Dan, there's a lot of CCC paper. There's a lot of things that have come down dramatically. I was looking at a Magnum Hunter preferred the other day. I know that some of these companies that are trading at $1 or $2 might be opportunities. I want to make it clear, first of all, we're not talking about common stocks.
Correct.
So the opportunity, the common stock may be worthless in some of the things we're talking about.
Exactly. You're buying into some issues that where the end result will be that the common goes to zero, but the bondholders are restructured or made whole or appeased in one way or another. And what I'm trying to tell people, I think that there's a great opportunity in this. I mean, I've gotten 3 phone calls from various hedge funds wanting to pick my brain on what's going on.
Pick your brain.
Well, because there's a lot of opportunity here, but what you need to look for, I think this is what's key. What you need to look for is obviously a tremendous amount of distress on the bond side, but you want to see assets on the other side that are going to be performing over the course of time and over the course of years, and obviously over the course of a oil recovery, which will take several years.
Well, we're talking about cash flow right now. Is that what we're looking at?
That's what we're looking at, and that's where the default risk comes in. But over the long haul, what you want to see is somebody who will get a bid somewhere down the line for assets, whether they're getting restructured or whether they're getting sold or whether they're actually going broke, where there will be somebody to stand there and pick up the pieces. And this is the time when a lot of guys, David Rubenstein, for example, talked about it in Davos yesterday, the Carlyle fund originator.
So they can pick and choose.
And they have big money. So here's what you need to look at least. And here are some companies to give you some starts, because there's dozens out there. But for example, Halcon.
Right.
Halcon has a tremendously bad debt profile. They're in deep trouble from a high yield point of view. On the other side, however, they have tremendous assets in the Bakken that are worth money to a lot of players out there. In the end, there will be some sort of money for Halcon, whether it comes in as a re-infusion of capital or whether it comes in as a bankruptcy takeout. There will be money at the end.
Now,
so their bonds, I think, have some value.
If the first one, the second one might be longer term, right?
Yes, I think that's right. But again, you've got what you're looking at is you're looking at bonds at least that are maturing in 18 or 19 or 20 that are yielding upwards of 18, 19, 20%. So again, the risk is there that there is default somewhere, but at least as long as you wait, you get a tremendous coupon on the back end.
It's important. The takeaway is not to go buy the common, which seems like a lottery ticket. Don't buy the common.
Correct. The common, the way that I see these stocks, just to give you another example on the bond side, which is not a good idea, is Goodrich, for example. Which
GDP.
Yeah, also with bonds that are trading 50 cents on the dollar, but again, the assets do not really make them.
So you have to look at where they have the assets, what might be valuable, what the debt is, but not the common.
Correct. The common to me is an optionality on oil recovering more quickly than we think.
That's a great point.
That's really all it is.
Right.
And if you don't believe in that, there's absolutely no reason.
Anything else besides Halcon seem interesting?
Yeah, Oasis to me seems interesting.
Oasis, I saw a downgrade today.
Right, and Northern Oil and Gas. I mean, there's lots of them that you could look at. I'm kind of, I want to be a little bit careful on who I deliver out here. Even Continental has gotten some hits in their corporate yield.
I mentioned this Magnum Hunter. The preferreds goes down every day.
Yeah, and I don't particularly like the assets of Magnum Hunter, so it's not one that I would center on personally, although some of their oil stuff and also out west in North Dakota is okay, but that's one I would tend to shy away from.
Excellent. Okay, well, this is a great place to look. Thank you so much, Dan Dick.
Right, thanks.